Hello. I almost said good morning.
Normally.
Definitely afternoon.
All right. Hello. I don't know where our little name tags are. Normally they're on there. Let me see if I can. Does this give us name tags? No. Does this give us name tags? No. I don't know. Well, I'm Rachel Gallegos.
Tim Bonzalar.
Grant Alexander.
So we just want to jump on, talk about the market, talk about what rates are doing, and keep everyone educated. So we will start with Grant. Grant is with Rapid Home Finance. He is one of our favorite lenders. So Grant, tell us a little bit about what the interest rates did and what we're expected to see, because I know there's been some changes.
Yeah. So interest rates, especially over the last week, have definitely climbed. And so right now we're starting to see rates probably in the low threes versus in the twos anymore. There are still some opportunities, but the thing is that rates are still like at an all-time low. If it was this time last year, the rates are lower than it was this time last year. So we kind of been spoiled during the whole pandemic process as far as rates go. So you might have some loan officers saying like, oh, the refinance boom is over. It's like, no, we're definitely still in a refi boom. But the thing that I really want people to concentrate on is, there's really not a huge difference between 2.9 and 3.1 for one thing, but equity is at an all-time high, okay? So there's a lot of opportunity and a lot of options to look at whether you're buying a house or refinancing a house as far as using equity to lower your debt payments. And so what we're doing a lot of right now is we have a lot of people that are actually refinancing, paying off debt with the equity in their home, but refinancing that loan into like a shorter termed mortgage, like a 15-year mortgage. So the 15-year mortgage is obviously going to make your payment increase because you're paying it off sooner, but the payments that you save on paying off the debt outweigh the increase in the mortgage payment. So you're doing a couple things. You're increasing some cash flow, and you're also shortening the time it takes to pay off your home. So we're seeing a lot of that right now. But I think the biggest thing for us on the lending side is getting really creative on how to formulate pre-approvals and offers in order to get offers accepted in this really competitive market.
Yeah, so let's talk a little bit about, what was it yesterday you posted on social media, right?
Yeah.
The this or that.
Yeah.
And I thought that was interesting. So, the this or that he had was as a listing agent, which, this would be good educational, information for buyers out there. Would you rather take an offer that's 20% down, no appraisal gap, right?
Yep.
Or an appraisal gap, 5%
or
down.
5% down with like a $15,000 or $20,000 appraisal gap.
Right. So one of the things that you and I, or that I had said was, the first thing I would do is call the buyer with the 20% down and say, hey, can we get an appraisal gap? Right.
Mm-hmm.
If we can push for can we get an appraisal waiver? Right.
Yep.
So if I can get a buyer's lender to say, yes, we can do an appraisal waiver on this, then I would go with them, right? Why wouldn't you?
I think if you're putting 20% down and you're looking to put in an offer, you should definitely reach out to your lender to see if they can determine whether you have an appraisal gap before you ever put the offer in.
Yes.
And so if there is an appraisal gap, obviously the 20% down is going to look better. I mean, there's no appraisal at all. You don't need to worry about a gap. But if it does require an appraisal, or the thing is, whether there's an appraisal waiver or not, a lot of people are just putting in offers at 20% down. They might end up getting an appraisal waiver, but they don't find out first. So there's no way for the seller to know whether or not they're going to need it. And there's a really good chance that contract states, subject to a satisfactory appraisal, and all this stuff like that. So, the thing is whether you get an appraisal waiver or not is really irrelevant if you're not putting that in the offer, or the seller doesn't know when you put that offer in.
Right. Yeah. Yeah. It's a tough market. It's when you've got people out there that are saying, hey, I'll bring an extra $20,000 to the closing table if it appraises low, unless you've got, buckets of cash laying around, it's hard to compete as a buyer today.
Right. I think what's important. So the example I was thinking of was that sometimes from the seller's perspective, the percentage of down payment shows the strength of a borrower, right?
Right.
But that's not always the case. Like in this case, like I was thinking, okay, let's say it's a $250,000 house, right? If someone's putting, 20 grand down, 20% down, that's 50 grand.
Yeah.
Right. So the person that actually went 5% down and said they'll give a $15,000 appraisal gap, if the full appraisal gap ended up taking place, they still would be coming out of pocket with half of what the 20% down guy was.
Yes.
Right. And it's all about flexibility for the seller. Right. So obviously even though it's a 5% down, there's some strength in that buyer because they obviously have not only the cash for the 5% closing cost, but also an additional 15 to do a gap coverage, right?
Right.
So the flexibility on the 5% offer is way more than the 20% offer, because if you don't formulate the 20% down offer correctly and say like, hey, in the event it doesn't appraise, we're willing to put less down, stuff like that. But if it's not,
a lot of times as a listing agent, right. A lot of times as a listing agent, when I get multiple offers, if I've got two of the same, price and one's a 15% down and one's a 5% down and everything else is identical, I'm going to go with the more percent down because they've got a little bit of cushion there if it appraises low to potentially negotiate.
Yeah.
So, yeah.
But if it's less down and in their offer, they say they're willing to cover a gap, right?
Yes.
And the event the appraisal does come in low within the range of the gap that they said, right? They say they 15,000 and it came 10,000 less.
Yeah.
You don't have to do anything with that contract. That contract is still active and in full force.
Yeah. There's nothing to negotiate.
If you don't put an appraisal gap, even if they have the ability to 20% down, well, I could put 10% down and cover the difference, whatever. You still got to negotiate, and they have the ability to walk away because they're not under contract anymore because it's not a satisfactory appraisal.
Right.
So it's making sure you're formulating that lower, like if you want to get your offer accepted, make sure A, you're willing to do all those things.
Yeah.
And B, formulate the offer that makes the least amount of risk for the seller.
Yeah. Right.
And do it that way.
Yep.
No, I agree with that. And that does, unless you are specifically doing 20% down to, not have PMI or to have the mortgage payment where you want it to be, it definitely makes more sense to go in with a lower percentage down and offer an appraisal gap, because that appraisal gap is not a guarantee that you're going to have to spend that money. That's only if.
Yep.
And then if it does appraise, then you still can do the larger down payment that you want.
Exactly.
You're just going into it saying, I'm willing to do a lower down payment to do this appraisal gap, to win this, have them choose my offer, but it could play out in my favor. So
yeah. I actually I shot a video yesterday that will be coming out probably early next week on how actually a VA offer can be stronger than a conventional offer. And in my example, I won't go into detail, but in my example is we're seeing more of is VA offers that are actually coming in with down payments. Mm-hmm. Okay. They sold a house, they have the assets, they want to put something down to either get themselves a lower loan amount so they have a smaller payment. Technically the VA buyer doesn't have to put anything down. They can go 100% financing. But their ability to finance 100% of the appraised value gives them more flexibility than any other offer. Yeah, like someone gives a $20,000 appraisal gap on a conventional deal, but the other guy was putting 40 grand down. He has $40,000 appraisal gap.
Yeah,
that could come 40 grand low, and nothing changes for that veteran.
Yeah,
they don't pay mortgage insurance anyways. Right. And if they have a 10% disability rating, they don't pay the funding fee. So I think it's just when you're looking at offers and when you're putting in offers, you have to have something that sets it apart, and you have to be very clear with the seller what that offer is, because I think sometimes on face value, one appears to be better than the other, but when you really start to think about it, it's not.
Right. Yeah.
I
No, I
think,
agree.
Grant, what you were saying too earlier as well, alluding to the fact that creativity, we're having to be creative in different areas, and I think this whole discussion has been kind of illustrative of that, of creative things that we need to start to look at, and really it's causing the agents and it's causing the lenders to really sharpen their pencils in a lot of different ways and stay on top of what's happening. It's not like we can just go in and just rubber stamp stuff and turn it in and there you go. It's really this day and age, do your homework, get somebody that knows what they're doing, stay connected to what the trends are and what can be done to, like we've been talking about, to be able to get that bid that everybody and his brother has put in for.
Everybody and their brother.
I think in the past, I mean, I shouldn't say in the past, because I think some people still do this, is like if they get a multiple offer, like from the listing side, is they tend to go, okay, I got 20 offers on this house, take out all the FHA, take out all the USDA, take out all the VA. I only want to look at cash and conventional. And you might not realize that you might have just threw out the best offer.
Yeah,
right.
I agree.
Don't look in detail because, in some cases, like USDA, no one goes that route. That one's a slightly different because no one really goes that route unless they don't have any funds, right? So there's really not a whole lot of flexibility. But there are people that go FHA because they, and put $200,000 down because they happen to have a bankruptcy 3 years ago, and the waiting period is longer for conventional than it is for FHA or something like that.
They have a higher debt to income ratio.
And unless you're in the lower, unless it's in a lower price range, like I think people are concerned about appraisals with certain loan types. I'm on an appraisal page, and it's funny because if it's a health problem, if it's a structural problem, if it's this, it isn't going to matter if you're FHA or conventional. It's going to get called out by an appraiser, right? Yeah. So there's just, trying to debunk some myths, but yeah, it's crazy out there.
It's crazy out there. What do you expect for March and spring, early summer?
I hope we see some leveling off. Rates.
I'm hoping an increase in interest rates will level things out a little bit. But you're right, they're not enough to do anything.
Affordability is still like the prices might be rising, but with rates, I mean, there's people aren't going to drop off. I don't think it's going to help with inventory issues.
Yeah,
I really don't. I think rates could be 4, and you'd be like, okay, we used to have 20 offers, but now we only have 10. It's like that's still a problem,
Yeah.
So I really honestly, and I'm not like a forecast guy really, but I don't see in the next 5 years this changing. I think people that buy houses between now and the next 5 years will have massive equity down the road because there's no way they can keep up with this demand. You cannot build fast enough.
Well, especially when they, like we see even Mishda came out with the increased. I mean, don't get me wrong. I know that there's people that need, it is extremely helpful for, but it is making our inventory situation way worse because now you've just added more buyers to the market. Like, what are we doing to get sellers to the market?
People, I used to offer Mr. products. I personally don't, so I don't want to talk about, too much about something that I don't offer, but I'm very familiar with it because I've done it in the past. And it used to be, the max was up to $7,500. Okay. Yeah. So that was to cover, like, you had to come up with 1%. 7,500 could be the rest of the down payment plus closing costs, but it was a max of 7,500. The issue is prices getting higher. That 7,500 don't last long.
Yeah.
Right? And so they throw in this extra 10 grand. Mind you, if you are looking at this product, it's not free money. It's a 0% interest loan tagged to the property. You have to pay it back whenever you sell, refinance, or pay off the loan. But it doesn't, I mean, I'm not seeing people like that had Mishta before losing by $10,000.
Right.
They're losing by 50,000. You know, like
it's a hard market for a Mishta buyer right now.
So I've heard some people talk about like even the federal government like coming in with like a $15,000 down payment thing, and I think that's a lot of politics talking about something they have no idea about, because on its face it seems like a really good thing, and it's going to mean is that house is probably 50 grand more than it would have been because you have so many more people out there.
It's really hurting. It's really hurting. You know,
it is.
It's providing more money for down payment assistance is bringing more buyers to the market, which is affecting all of those other buyers that are also trying to buy a house, because now you have more competition. So it really, and it's driving prices up.
I thought of someone was talking about I saw a post about someone talking about out of state investors buying up properties in Michigan. Now, this isn't like they're just now starting to do it, but the values here are like pennies compared to some of the states that these people are coming from and buying up properties. So I was like, well, that's not good necessarily just from an inventory aspect. Like if we can't sustain the people living here, but we have people from out of state buying up properties, it's not a good thing. And I was
then they're charging ridiculous rent rates.
Yeah. And so I was like, well, what can you do about it from a policy standpoint? And I'm like, honestly, I was like, what if you gave and this is just an idea, this is nothing real. What if you gave the seller a tax credit only if they sold their house to an owner occupied borrower, or person? Like, hey, you might want to take this offer from this guy from California that is going to turn your house into a rental. But if you take this offer, we'll give you a $10,000 tax credit.
Right. So, or even for Mishta buyers, if you are a seller who accepts a Mishta loan, we'll give you a tax break on your, whatever.
Yeah. Because I mean, you can't necessarily blame the seller being like, the kindness of your heart only goes so far when it comes to dollars. Like,
well, and then we're just getting into, fair housing.
Yeah.
Possibilities.
I mean, like if someone's offering 20 grand more, I don't care if he's an out-of-state investor.
That's what I'm saying. Yeah. People aren't going to go and choose an offer because it's like, we shouldn't know anything about the buyers to begin with, right? We're looking at an offer. We're not looking at a person. So, a seller is not going to be like, I'll choose this one instead because it's probably somebody I want to be here.
Well, post 2008, when we had a ton of bank-owned homes out there, like the banks that own them, like it would have to be on the market for like 60 days before they would even entertain an offer that was not from an owner occupier.
Yeah.
Right.
Yeah. Now it's only like 10 days, I think.
Yeah. So it's like, they've done stuff like this before where it's like, hey, if it's owner occupied, but there's just a lot of people were sitting on their cash waiting for a crash. The crash really never happened in essence of the real estate market, but they're just going to cheaper markets and buying them now.
Yeah. Yeah. All right, let's look at numbers. Are you going to stay, Grant, or you got to go?
I'm actually going to go.
Okay.
But
we appreciate it.
Grant. On some tangents today, but I appreciate you guys.
Bye, Grant. Have a good weekend.
See you, Grant.
Yep. Bye-bye.
Okay. So let's look at
look at the hard, cold facts.
We have February 2021. Now, mind you, we're 2 days shy, so these numbers are not exact, but pretty cllose.
Not exact, but a good representation. The sold numbers aren't exact. The others are probably, aren't going to change at all.
So this month, let's look at our solds from this month, last month, and last year.
Correct.
Ugh. It's pretty.
Yeah,
I feel like every
obviously-
time we're on here, it's like every
Yeah,
time we're on here, it's like it gets worse and worse. Like we're always talking about how bad it is, and it's every month it gets worse.
The sold numbers go down simply because there are no houses to sell,
There's
or
nothing.
few compared to what it has been. So, yeah, like we've been talking even in the last segment with Grant, we need to somehow to get folks to list their properties and then help them understand that it's a good time to sell as well as to buy.
Yeah, and I think that the biggest, what everyone's saying, the people that do need to sell and buy or want to buy but need to sell is I'm not going to sell because I'm not going to be able to find anything to buy. And it's like there are strategies. There are even loan programs. There's loan programs to kind of protect you, if you're eligible for it. But like there's bridge loan programs where you're paying interest on this and using the bridge loan to use as your down payment. And if your home can sell quickly, that way you can purchase first and then sell.
Yeah.
And if it all works out appropriately, you generally will close on the same day anyways. You just don't have to write a contingent offer. So,
and we talked about being creative last segment too with Grant about lending and all that. And there's also the side of being creative when you put an offer in to say, hey, I'll give you 60 days as opposed to,
for sure.
First, 10 days after close or whatever. We understand that there may be an extended period to allow people to get into something. It's just that process is a little bit more time consuming.
Yeah.
So that's an option of being creative as far as putting an offer in that where you can, navigate that situation where you're selling, but you also have to buy.
Yep. And I feel like for sellers, it takes an element of faith. If you are going to say, you know what, I would like to move. I would like to buy a bigger home or downsize to something smaller, but I don't want to list my house because there's nothing on the market or there's multiple offers and I don't want to be homeless, right? It does take an element of faith to be able to say, you know what, I'm going to list my home and my listing and my sale is going to be contingent on finding the next home. And it feels scary, especially once you get an offer, right? You get an offer and you're like, oh my gosh, I have to accept this offer, but we haven't found anything yet.
Yeah.
9.5 times out of 10, it works out. It works out exactly the way that it's supposed to work out. You find the home that you want to find, or you know what I mean? It works. You just have to have that element of faith to know that.
Have you had any clients that have gone homeless for any period of time? No.
Never. Nope. And that's the thing is it's a matter of, knowing how to protect them properly. Right. As a listing agent and how to fight for them properly and work hard for them properly as a buyer's agent. So it's doable.
You have to be diligent. You have to, leave no stone unturned. And like we said, being creative, there's other ways to be creative too, is to be proactive a lot of times. Sometimes we're not even waiting for listings to hit the market. We're connecting with people to say, hey, you got anything come on? But some might not be listed, but we're gonna be aware of it before it even gets listed, so that we can.
For sure. Yep. I totally agree. So, okay, so let's look at average days on market. So February of 2020 was 56, which seems like such a long time. Could you imagine a house sitting on the market right now? 56 days would be like, what's wrong with that house?
Right.
Which again, that is the average. So if you take it that's a lot of that's new construction that kind of skews those numbers. New construction and like lakefront homes take a little bit longer to sell. So, but then you look at last month compared to this month, it's actually gone up. So again, because the solds are so low, chances are there were a higher percentage of new construction or a higher percentage of $1 million+ homes that sold in February. And so those days on markets are generally higher, and it probably skewed that average days on market a little bit. But so, I mean, average sale price looks from last month to this month has stayed pretty consistent, but look how much that's gone up in 1 year. $40,000 in 1 year. Well, 30,000. 35.
Yeah, about $30,000 in the last year, which is About, I would say, I guess you could say that's about 10%.
Yeah, and you know what? To be honest with you, I think about last year, and the entry level market, in my opinion, was probably somewhere between 175 and 185. I dare say that we're probably looking at one closer to 200 right now. It's
Yeah.
anything
Yeah.
under
Yeah.
200. I don't want to say that I don't want to call it entry level, but it's almost closer to fixer upper. Anything under
Sure.
anything
Yeah.
under 185 or 175 is probably closer to a fixer upper.
Yeah. There may be some level of distress that you're just gonna have to deal with, and some people, that's, they're fine with that.
Yeah.
But as far as like move in ready, don't have to, raise a finger. That's harder to come by.
And now,
At
mind
that,
you,
at that price point.
and keep in mind, I'm not talking like list price, because you might see a listing for 175 and it looks like this is a move-in ready home,
Mhm.
but they're selling for $20,000 over list price, so it's bumping you closer to the 200 mark. So
That's it. Yeah, we both, and everybody has run into that, where they're, clients are putting in offers, good faith offers that typically would be, above list price. But I mean, the offers that are winning the day in this day and age are considerably over list, in a lot of cases, and it's a little bit frustrating for some of the buyers. But
I agree. So I would say, you and I check the hot sheet every day, and we usually talk about, did you see this house that's listed today? Or, I do feel like February was a hard month for new listings. As far as like Holland, Zeeland, Grand Haven, on a daily basis, it was like discouraging to open it and see like 2 to 3 houses, or a condo and 2 houses, or 2 condos and a house, or maybe some days we'd get like 6 new listings in the Holland, Zeeland, West Michigan area. But I'm really hoping.
Right, especially from our standpoint, where we have buyers ready to go buyers, and then we're constantly looking to say, okay, is there something that my buyer would fit? And it's every once in a while you'll get one, and there's one.
I do feel like we've got spring break coming up. I think that March we start to see a little bit, in years past, you see it picks up a tad mid-March. I think that weather like this, I feel helps. The sun starts shining, you don't see as much snow, so people are like, okay, it's time to start getting ready. And but I really think the big surge comes right after spring break. So we'll see if it comes earlier than that this year. I don't know. I think it depends on what our weather does in the next month.
Right. Either way, it's right around the corner.
It's right around the corner. I actually just had a listing appointment today, and they were talking about dates that they were going to list, and they were kind of going back and forth between before spring break and after spring break, and ultimately they settled on before spring break because they want to beat the rush. They want to get theirs on the market before all the other people list their houses.
That's a good point. Yeah, exactly. Yeah.
So just something to think about if you're thinking about listing this spring. You're actually, to be honest with you, if you are a buyer who needs to sell, a great strategy is going in and saying, I'm going to list my house the week before spring break, contingent on home of choice. Right. You get that puppy under contract, within a couple days or within a week or whatever, with, the security that you don't have to move until, or you don't have to, close until you find something else. That way, when you go into the week after spring break, when things start to get crazy, you've already got an accepted contract, and you're going to be a much stronger buyer saying, I'm only contingent on closing. I'm past inspections, past appraisal, just need to find something new. It's actually not a bad strategy. So
not at all. Yep.
Something to think about.
Absolutely.
All right. Do we got anything coming up that we got to let people know about?
Well, we've started this video series called Meet the Zeal. So I think it's been real fun. to do that, to introduce people to the different businesses around the Zeeland area.
I
And
have
so we
loved
encourage
doing it.
people. Yeah, we encourage people to go to our Facebook business page, and they're all listed there. They're on our YouTube channel, and we'll be doing those, a couple of those a
Yeah.
month. So that's fun.
Yeah, it has been fun. We're yeah. All right. Well, we hope
right.
everyone has a great weekend, and
Right.
we will see you all next month.
And next month, those sold numbers are gonna be much higher.
That's what we're hoping for.
Yep. Yep.
All right, bye.
All right. See ya.